Well, the big story today, Boston. All around the country, everyone was consumed by the massive manhunt in and around Boston for the surviving suspect in the Boston Marathon bombings. Americans at work, at home, and even on the trading floors on Wall Street were glued to television sets for the latest news. But business did carry on. On Wall Street, stocks rose slightly on light volume, but three major stock averages ended with their worst week of 2013. By the closing bell, the Dow was up by 10 points, the Nasdaq gained 39, and the S&P 500 added 13 points. For more on the story and the mood of investors this week, we turn now to Bob Pisani at the New York Stock Exchange.
It was a tumultuous end to a tumultuous week, bookended by the Boston Marathon bombing and investigation. Stocks opened mixed, with IBM down about $14 right out of the gate on disappointing earnings. IBM is a Dow component, and that $14 drop cost the Dow almost 100 points. But it was the ongoing investigation in Boston that dominated traders' attention. For much of the day, traders stood around monitors watching the developments unfolding. When they weren't discussing Boston, the focus of the conversation was the poor performance of the markets. With the Dow down roughly 2.2% this week, many traders noted that this was similar to the meager 3% pullback at the end of February, which proved to be a buying opportunity. But many have argued that this pullback might be different. First, this decline saw heavier volume and panic selling, particularly on Monday and Wednesday, when 90% of the volume was on the downside. Many are now questioning whether we are still in an uptrend in the markets. Second, the economic news is different. March and early April economic numbers have been weak. The final piece of the puzzle is earnings, and with only 1/5 of the companies reporting so far, the early news has been mixed. There is one clear trend. Revenues have been lighter than expected. Less than 1/2 of the companies have been able to beat their estimates. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Joining us more on the markets now, Andrew Burkly. He's Chief Portfolio Strategist at Oppenheimer and Company. You know, Andrew, as Bob Pisani just reported, it was a tumultuous week. It was also a very emotional week, not just because of those volatile swings in the market, but because of that terrible tragedy in Boston that continues on. So when you were hearing from clients today, how are you advising them on an emotional day like today?
Yeah, well, I think, here in New York, everyone was kind of glued to the television, but talking to a lot of colleagues in the Boston area, they said it was just very eerily quiet and, just the lockdown was very, very strange. But when we talk to clients and investors in general, we try to encourage them to take a longer-term perspective and not get caught up in the volatility of these short-term moves, but to try to focus on the longer-term fundamentals, which we still think are still pretty good. The economy's still growing, earnings are still growing, the Fed's still pretty supportive. But, certainly I think volatility has picked up a bit this week, and we expect that to continue here in the near term.
And that's what I was going to ask you. I mean, assuming that this manhunt is solved and the suspect is apprehended this weekend, turning to Monday, how do you think things are going to play out? What's going to happen next in the market? Is volatility still going to dominate trading? Are the markets going to go up? Are they going to go down? What's your prediction?
Well, I think you have both macro and micro trends next week. And as you said in the lead there, about 20% of companies in the S&P have reported earnings, but it really gets heavy next week. We have about 170 companies in the S&P 500 reporting and about 10 Dow components. And earnings have been mixed. They've been okay. Top line has been a little soft. As Bob Pisani said, only about 45% of companies are beating on the top line, even though about 70% of the companies are beating on the bottom line. So it continues to reflect this sluggish global economy that we have.
So, so what is the message of these earnings, and how should investors use that information when they're making their investment decisions?
Well, I think, again, I think you're going to see the near-term volatility, and we do think you're going to get a bit of a setback in the market. But we do think longer-term the economy is still growing here, so we would use that as more of a buying opportunity. If you look within the earnings, what you're seeing are the companies that have more stable earnings path, like consumer staples, are doing okay, where the more cyclical-oriented companies are the ones that seem to be disappointing here. But you're now paying a pretty steep valuation differential for those stable earnings companies, like consumer staples. So we would actually start to look to rotate the other way, thinking the economy is going to improve and to get more into more of those cyclical areas like technology potentially.
Oh, you would get into technology, even though it's been, you see bargains because they've been so beaten down over the last couple of weeks?
Yeah, I think the valuation differential is just so stretched at this point. You find a lot of the big stable consumer staples companies trading at 20 times earnings, where you see a lot of the big technology companies trading about 10 times earnings, so about half the valuation. And we do think there's some good value there as the economy does improve. We think that's a better opportunity.
I want to ask you also about economic numbers, because next week we are getting some economic numbers on housing, but also we're going to get a sense of how the economy grew in the first quarter with that gross domestic product GDP number coming out. How is that going to impact market action next week, do you think?
Well, I think the components or the mix of GDP growth is going to be very important, because what we saw in the fourth quarter of last year was a really big drag in terms of government spending. And that's not likely to repeat here again in the first quarter, but that's what investors are going to be focusing on. I think consumption will stay okay, which has been pretty good all throughout in here. But we do know the first 2 months of the quarter were much stronger than the third month, March. And we do know the data so far in April has been soft as well. So it's more of the mix in terms of growth, how that sets us up for the second quarter and going forward that investors are going to be looking at.
Andrew, thanks for the overview. Thank you very much. Thanks to Andrew Burkly, Chief Portfolio Strategist at Oppenheimer and Company.